Mid-August, a busy week ahead on the calendars, as well as geopolitical risk and global politics. The man to help us understand and digest this information, Bob Mason of FX Empire. This is your week ahead. Hello, Bob, and thank you once again for joining us. Let's dive straight in. It promises to be a rather busy week next week, third week of August. What can we expect on the economic data front?
It's a busy week ahead on the economic calendar. Key for the US dollar stats-wise will be New York Empire State manufacturing numbers for August on Monday. Focus will then shift to Thursday, the weekly jobs claims figures. Obviously, that's material, and the Philly Fed manufacturing index numbers as well for August. So those are key stats ahead of a busy Friday where you got prelim August private sector PMIs, where you're going to be looking at service sector activity. That's going to need to continue to pick up to support that sentiment towards the economic rebound. For the pound, it's also a busy week. Focus will really be at the end of the week, however, where you got retail sales and the private sector PMI. So expect retail sales and service sector activity to be the key drivers for the pound. Inflation numbers midweek, will garner some interest, but the key numbers and the key drivers in the week will be the stats on Friday. For the euro, you're going to be looking at the Eurozone inflation numbers midweek, but really, you're looking at Friday. It's the prelim August private sector PMIs for France, Germany, and the Eurozone. Expect service sector activity to continue to be the key drivers, despite obviously manufacturing sector from Germany being the main indicator across the private sector numbers. So service activity will need to continue to pick up, and the Eurozone composite to support a continued upward momentum in private sector activity to support the euro.
So a busy week to look forward to on the major currencies, but how about the Commonwealth currencies? What can we expect there?
For the commodity currencies, it's the LOONIE that's in action really on the economic calendar front. Key stats include inflation figures and retail sales figures. Retail sales figures at the end of the week should be the key driver for the LOONIE. For the KIWI dollar, you've got wholesale inflation figures for the second quarter midweek. That will garner some interest, but following the RBNZ's dovish sentiment in the week prior, we're still looking at consumer and business confidence and consumption as the key drivers for the KIWI dollar. For the Aussie dollar, there's not much to consider on the economic data front. So expect, updates from trade talks between the US and China from the weekend, and obviously geopolitics, tension between the US and China and elsewhere to be the key drivers for the commodity currencies, particularly the KIWI dollar and the Aussie dollar in the week ahead.
So we can expect more than just July's figures, so we probably looking at the most of the summer's figures coming out next week, which promises to be rather busy. But let's focus on Asia now, specifically Japan and China. How are they faring?
The Japanese yen, relatively busy week ahead actually. Beginning of the week, we've got second quarter GDP numbers in focus, so I expect plenty of attention there. Obviously, we've seen some quite dire numbers across the US, the EU, the UK, China was the only one that provided some comfort, but they were first out of the blocks after the pandemic. So I expect these numbers to garner some interest. Got industrial production figures as well. Then focus shifts to trade data midweek. Obviously, let's see how, trade terms are going. We're not expecting anything spectacular. So anything positive will be a boost for riskier assets. Later on in the week, inflation numbers, well, that's going to have a muted impact on the yen and broader risk sentiment across the markets. For the Chinese yuan, nothing in focus in the week. So, we're going to be expecting central bank action and any chatter from Beijing to provide direction for the yuan in the week.
And lastly, let's finish up on geopolitical risks. What can we expect next week?
On the geopolitical risk front, well, we've got the usual suspects. We've got Brexit. Obviously, we're moving towards the end of August, and, the EU and Britain have agreed to continue talks through to the end of September ahead of the October EU summit. So we're going to need to see some progress in talks, as the end of the month approaches. And then you've got US-China tensions. So how did trade talks go over the weekend between the US and China? Beijing has said they're going to adhere to that phase one trade agreement, despite, the breakdown in global trade terms. So let's see what comes out of that meeting. Anything negative, and expect risk sentiment to really take a dive. And then finally, US politics. You got, Trump and Biden at it for the presidential election. Biden's called as his running mate. So, we should start seeing the polls begin to form, some sort of sentiment towards that selection. Biden's been out in front largely because of the global pandemic and the impacts of the COVID-19 virus on the US economy. So let's see how that plays out in the week ahead. And, the markets should be starting to pay attention to these polls now.
Lovely. Well, that's all for today, Bob. Thank you, as always, for joining us, and I will see you again next time. That was The Week Ahead with Bob Mason of FX Empire. In the meantime, keep up to date with all the latest developments in the market by following us on all our social media outlets.